Hi, this is Keith Atto, and this is a Monday morning market overview, September 28th, 2009. Firstly, I'd like to note the disclaimer: this is not investment advice. Please contact and review any information from here or elsewhere, for that matter, with your personal financial advisor before acting upon it. This last week, we had the S&P and the NASDAQ decline 2% and the Dow Jones 1.6% as a result of disappointing economic news, both on existing home sales and GDP, and also where the World Bank leaders indicated that US dollars will not be needed to shore up their economic stabilization plans. We also had China come out with economic news where their factory output has climbed the most in a year. The retail sales had their best gain this year, and urban fixed asset investment accelerated in the first 8 months of 2009. Offsetting this is the fact that exports fell for the 10th straight month in China. We also have the US Euro in and around 146.60, 146.50 right now, and I look for that to hold maybe around 146, and I would expect a bit of a pullback here after the recent significant devaluation of the US dollar over the last few weeks. We also went through a market quarter end, and today is the last day for funds to shift their asset allocations between cash and equity, and so today will be an interesting day. It looks like at this point the futures are pointing towards an up day. We had G20 come out with no surprises. We also had a global trade report come out from the Bureau for Economic Policy Analysis that showed a 3.5% increase in July and a 1.6% increase in June, the highest since December 2003. The Baltic Dry Index slightly below 2200, and we'll see if that can hold the 2100 area. There does seem to be strength in shipping, which would also bode well for an indication of global trade. We have economic reports coming out this week. On Friday we have the big one, namely unemployment, and we also have the non-farm payrolls coming out, and this will be scrutinized to see if the economic recovery is real, if it's translated into jobs, and if the market rally is likely to continue. The other thing that will be noticed is we've had bottom line growth on companies as a result of cost cutting, and we'll see if they can now increase their top line. We also have on Tuesday the Case-Shiller Index for home prices and consumer confidence as well for September. Wednesday we have the final GDP number for the second quarter, and on Thursday we'll have construction spending, pending home sales, and we'll also have the US auto sales figures coming out. They're expected to decline as a result of the Cash for Clunkers program in the United States. No more. We'll see what happens. There are certain meetings that are going to take place. The FDIC board is going to plan for building up its deposit insurance fund, and that's on Tuesday that they'll begin that. On Tuesday and Wednesday, the SEC is going to consider additional regulations on short sales, and as well Ben Bernanke will address financial regulatory reform on Thursday before the House Financial Services Committee. So all in all, it's a big week. And actually lately all weeks seem to be big weeks. And in Mandarin there's an interesting two characters for crisis. It's called Wei Ji. And Wei means danger and Ji means opportunity. So within this crisis there's danger and there's opportunity. And I think that's interesting in how China really looks at things differently than we do, and their linguistics demonstrate that. So for goodness sakes, this week